Greetings everyone, Joseph James here from theschooloftrade.com, March 15th, 2010. Here's your live trade and recap. If you guys were with us in the room this morning, pretty challenging environment this morning. Go over some of that in just a moment here, but I want to remind you guys about three important links. We've got one link, guys, and of course all these links are in the description of the video on the YouTube page. Just double click on this video. If you're watching it on anything else besides a YouTube page, it will take you right to this page here. Just double click on the video. Three important links. One for our blog, lots of great stuff on the blog right now. Another for our 12-month track record, and the third is for our free 3-week trial, so you guys come out and join us as part of our trial. Let's see here. 2 trades today, guys. We actually took one trade early this morning on the wave indicator. We'll talk more about that in a second. But 2 trades here live this morning in the room, guys. 56 ticks, 560 USD. As you guys can see, that puts us getting the week started here. 46.30 for the month, and we've got now over $26,000, almost $27,000 for the year of 2010 so far. We are still averaging just below $700 a day, guys. Make sure you guys keep in touch. We'll keep you guys posted throughout the rest of the month. What's the most important thing that happened today? What did we learn today? Well, this morning we opened up our charts, and of course, if you were here in the U.S., you're all upset because we lost an hour of sleep last night. Right? We had daylight savings time, of course, here on Sunday. It was yesterday, so we lost an hour of sleep. Monday, of course, always being a little bit of a slow start, and we know that triple witching is on Friday. All right, now we'll talk more about triple witching in the quiz of the day later on today. But so we knew this morning, Monday is usually a slow start. We had daylight savings time over the weekend. Triple witching is on Friday. We also have FOMC announcement is tomorrow. I just found that out. Checking out my news events the rest of the week. So when we opened up our charts this morning, we quickly realized we were right there smack in front of a very sideways, slow, choppy market. We watched things as they developed. At 8:20, crude was quiet. At 9:15, 9:35, 9:45 on gold was less than 100 on the pace of a tape. And guys, the most important thing that we learned today was identify the market ahead of time and then make your proper plans for the rest of the day. Now here's a great example of how we did our homework ahead of time here on the Russell. Now at 8 o'clock in the morning, we go over our technical and our mental preparation. I really want to encourage you guys to come in at 8 a.m. and take part of that. Now in this case, I'm going to direct your attention to the upper right-hand corner here. We looked at our slower time frame, right? Our slower time frame here. And now you can't see it on this, but if you zoom out, you're going to see a double bottom here. That's what this blue line is here for. The blue line is there to mark up the double bottom. Now that dark blue line, double bottom, we start breaking that blue line here at about 11:17 this morning. Now, of course, we had to wait for some, we had to wait from 8 o'clock, 9 o'clock, right, to 11 o'clock and 15. But what I want to use as an example of is that we knew that double bottom was there. We took the time ahead of time to go find the information we needed to prepare us for the rest of the day. Now let's see what happened at 11:15. Now if you remember, guys, we were right in the heat of the battle. Things were moving very quickly, and we were looking at this breaker pattern short here. Right? Price comes down, breaks a swing low for a breaker pattern short. Well, the breaker short was quickly, though, interrupted when we looked at our slower time frame and we realized, hey, wait a second, we knew about this earlier, right? There's a double bottom there. We should be more careful because, as you can see, what happened was the initial break below here, right around 67.6, quickly becomes very choppy. And boy, no wonder why, right? We had the double bottom on the slower time frame. So great example, guys, of a trade we were able to avoid getting all chopped up over because we knew what we were looking for because we did our homework ahead of time. All right, there's an example on the Russell. Now here's an example. We knew this morning, looking at the slow price action, we wanted to be very careful about momentum. In fact, we talked a couple times today about momentum and how to use momentum indicators. Right? They're very simple to understand, but a little more difficult to use in real time. All right, now there's 4 things I want to look at here. First of all, upper right-hand corner here, right? We have a breaker pattern long setting up. See that, guys? Breaker pattern long. We're going to break above this swing high, right, for your breaker pattern long. Now, with the breaker long, what do I want to see? I want to see momentum pointing up, right? Momentum pointing up for a long trade. Now follow me down lower right-hand corner. What does that momentum look like? Look at that momentum. Overbought, right? You know it's overbought because you can see, right, the 80 levels right here, which means anything above it is going to be overbought, right? Anything below 20s will be oversold. Okay, so you can see, guys, here on this momentum indicator, very choppy, right? I want you guys to really pay attention to the fact that we're all around the overbought territory, all very choppy, right? Back and forth. So that momentum, of course, as you can see, pointing down, right? Ended up pointing down there. That momentum is not going to help us very much. Okay, the momentum was very challenging today. Okay, so this momentum didn't look good. Then we looked at a slower version of that momentum indicator, and you can see it's just oversold and pointed down. Now guys, we used two momentum indicators today so I could really illustrate this example, in the sense that the fast momentum, very choppy and overbought. The slower momentum, when we're looking for a long trade, guys, this is the wrong time to be taking a long trade, right? With momentum, of course, curling over. And then last but not least, lower left-hand corner here on the pace of a tape. Look at how pace of a tape is slowing down, very slow in red. And then right above there, you see big sellers. Okay, so this breaker pattern long, guys, obviously we didn't take this trade today. But the most important thing I wanted you to see here was what we kind of went through all morning this morning, which was the momentum indicators. Right, momentum, of course, being overbought and pointing down. Now, this is an example we see all the time in lower volume environments, right? Slow, sluggish days like this, we're going to see the momentum indicator go from one extreme to the next. We have to simply know how to use that, right? Another one here on the dollar, right? Another great example. We're looking for a short trade here, right? Right-hand corner here, looking for a breaker pattern short. So with the breaker pattern short here setting up, there's your low of day. With that breaker pattern short setting up, I want to see momentum, right, pointing down from the top. Okay, now notice how we have on the left-hand side here, on the dollar, this is the dollar index. Okay, on the dollar, momentum is pointing over from the top. Now guys, what is momentum on the dollar? Negative correlation to the crude, right? Dollar on the left, crude on the right. Okay, so we have, of course, negative correlation. So if momentum is overbought and curling down, well, that's just like on the crude, momentum curling up right from the bottom, which means it's not going to work out. So another great example of how momentum really got in our way today, whether it be the negative correlation of the dollar, you can see here on my momentum indicator on both time frames here on the crude, right? Momentum curling and pointing up from the bottom, definitely not what we want to see, right, for a breaker pattern short. I want to see it curled and pointed down from the top. All right, guys, that's a great example, guys, of some situations we saw all morning today here on dollar, gold, Russell. And guys, the momentum indicator really told the story today. Now we took two trades. Of course, the first one here at 9:59, just before 10 o'clock this morning. This was a pretty simple pattern, guys. We had, of course, the short-term trend being down. We break below the red line here, 80.15. We mark up our swing low. Notice how we have the low of day here, but we did have 6 ticks of room. We had our 6 ticks of room, so that's fine there. Had our 6 ticks. 9:59 was the entry time. We got in at 80.05. As you can tell, guys, 80.05. That's within those 5 ticks of the big round number. We got a little bit lucky here because once we got short, boy, the sellers really piled on, filling our first target at plus 11 ticks, our second target at plus 11, and our final target at plus 13. So here at 9:59, guys, 46 ticks. Now we got a little bit fortunate this morning, obviously, because we had a pretty slow day, but the two trades we took were nice big winners for us. So obviously, in a slow day like this, we're very happy to see some big winners like this. So at 9:59, 10 o'clock this morning, short 80.05, we put 46 ticks there on the crude. Now the second trade and the final trade today, not long thereafter, about 20 minutes later, until we started seeing things really start to cool down here today. Short-term trend was down, another breaker pattern short. We break below the red line here at 6.5. We mark up our swing low, break below that swing low. 10.17, 11.06.2 was the fill. We took our plus 4 target, moved our stop down to entry, and of course we got stopped out as the price came right back up and reversed on us. So we put another 10 ticks in. So the first trade, as you guys can see, 46 ticks. Second trade, 10 ticks. That's 56 ticks total, guys, here on a very challenging morning here across the markets we trade. Let's prep for tomorrow. Tomorrow's Tuesday, March 16th. Tomorrow's Fed Day, right? That's, of course, when the FOMC, right, the Federal Open Market Committee, they meet about interest rates here in the U.S. We have their announcement at 2:15 tomorrow, right, 2:15 Eastern Time. So we'll talk more about how to trade Fed Day tomorrow morning in the room, but be expecting lots of volume in the early morning, and things will start to tail off, guys, towards the end of the morning. So be here for tomorrow, early for that. 8:30 housing starts, and, of course, our 9:30 U.S. market open tomorrow as well. Guys, hope you had a great day in the room today. Having a great week so far. Nice, another good month of March. If you guys want more information about that, just simply send us an email, sales@schooloftrade.com. We'll see you guys back here tomorrow morning, 7:45 Eastern Time. If you want a copy of our rules, our entry patterns, our routine, guys, the beginner's course is exactly what you want. Tomorrow's a Tuesday. We'll be doing another webinar tomorrow, 11:30 Eastern Time. Webinar tomorrow, 11:30 Eastern Time, and don't miss a tick. Again, my name is Joseph James. Hope the video helps. We'll see you guys next time. Bye-bye for now.